North Carolina's Triad market, job growth levels remain lackluster, and so does the local apartment sector. Is any improvement on the horizon? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Greensboro, Winston-Salem update. Let's start off with the economic story, and you can see from this chart that employment growth levels have been quite volatile in recent years. In 2013, the Triad did add 8,200 jobs, but that amounted to a growth rate of just 1.3%, coming in just below the U.S. average. And furthermore, you can see that Greensboro, Winston-Salem is still below the growth levels it saw in the mid-2000s. And in the broader picture, the Triad is still in a pretty deep hole compared to the employment levels prior to the recession. Measuring net job change since the start of 2008, the Triad is still down 3.9%. And that ranks dead last by far among the six largest markets in the Carolinas, and it's way, way, way below the nice growth rates of around 4% seen in North Carolina's larger two markets, Raleigh, Durham, and Charlotte. Given that backdrop, it comes as no surprise to see apartment fundamentals that don't look very good. Apartment occupancy rates and bouncing around, and as of Q4 2013, they measured just 92.9%. That was up 100 basis points year over year, but is still among the weakest rates in the country. Elsewhere in the Carolinas, Columbia is the only other market with a rate below 94.3%, and the Carolinas have generally done very well in recent years on the whole. Even less impressive are the rent growth numbers. Rent growth in Greensboro, Winston-Salem remains minimal. Same-store rents for new leases climbed just 1.4% in 2013. That was among the weakest nationally, and it was the worst performance in the Carolinas. However, you can see here that this 1.4% number was actually the Triad's best performance in 7 quarters, but it's been more than 2 years since the Triad has seen decent rent growth. And looking at submarkets, fundamentals are pretty unimpressive across the board. The only submarket with an occupancy rate above 93.5% is the small Burlington submarket. Occupancy there has been consistently solid, coming at 94.1% as of Q4. And Burlington has also been among the better rent performers of late. Rents there were up 3.1% year over year as of Q4. So will conditions improve in 2014? Well, it's going to be tough. Economists expect the moderate or fairly modest to moderate pace of job growth to continue through 2014. And furthermore, Greensboro, Winston-Salem is having a tough time competing for millennials, the prime apartment demographic, with nearby Charlotte and Raleigh, Durham. So it doesn't see the same generational demand tailwinds that other markets in the country have seen. So we think 2014 brings more of the same for the Greensboro, Winston-Salem apartment market, lackluster occupancy rates, and only limited rent growth. And that wraps us up for Greensboro, Winston-Salem. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.